Hello, this is Mike Swanson. I run the website WallStreetWindow.com. And today I got a really special guest. I'm speaking with David Skarica, who runs the website addictedtoprofits.net and the YouTube channel Stock Chart of the Day. You can find that if you type SCOTDAY in the YouTube search bar. Of course, I'll link to all this stuff in the description of this video. How you doing today, Dave?
Yeah, well, stock chart of the day is real simple. It's just Scott Day, so it's like the word Scott and then the word day. So that's what it is. So I just did a short form, and Scott obviously stands for stock chart of the and then day, right? So, yeah, I'm doing pretty good. Yeah, I think the crypto people or investors are doing better. So
I was telling you yesterday, I talked to you on the phone that at the moment, I felt like not much is going on in the stock market or the gold market for that matter, too. There's nothing really in the news, that the movements aren't really big. It may make me want to fall asleep. But then I noticed this morning, Bitcoin's, charging up. It's up like 17% in the past 10 days. And I got two messages from people very excited, very bullish. One of them is someone that's been holding, I think, the Bitcoins for several years with mega losses, and now they're hoping it'll go up a lot. And then the other person, just I showed you, they just sent me a message on Facebook. So the crypto community is excited. Are you excited about crypto and Bitcoin?
well, actually, my update. So we're doing this on the 28th. This year's a leap year, so there's a 29th this year tomorrow. On the 29th, I'm uploaded a pretty long video. Most of my stock charts of the day are just kind of like an overview, whatever. Some stock has a big move on earnings, or an economic indicator comes out, or maybe I'll want to talk about the US debt, and they're short. They're 5 to 10 minute videos. But this one's pretty long. It's more actually, I usually do 4 to 5 a week. So I've done one every day this week. So I'm not going to do one Friday. I'm just going to leave this one up kind of through the weekend, because I think this one's very in depth and people might want to, they don't have a chance to do it Thursday. They can watch it over the weekend. But anyway, we're going to show quickly one of the charts here that I have. So, it's all been obvious to me for a few years now. I'm not anti whatever coin or anything. I just think it's a risk on play. I think that Bitcoin is going to trade with the Nasdaq. It's not a currency. It's not a hedge against inflation. Is that, Bitcoin's really only been around since 2009, when we've had this big boom in asset prices, with a couple small drawdowns in 2018, 2020, 2022. So my opinion is that Bitcoin is just more of a risk on asset. And the few drawdowns we have had, like in 2018, like for a few weeks in 2020, when COVID, everything got locked down, and 2022, Bitcoin has performed miserably and actually fallen way more than the Nasdaq. So my opinion is it's just a more riskier form of risk on. And another thing where I'd be very wary if I was a Bitcoin investor, because this happened to us as gold investors. In 2006 or 2005, they launched the GDX and GDXJ. And I was like, this is great. These for the people that don't want to try to stock pick, they're just going to buy these ETFs. Then the ETFs will have to buy the gold stocks. It's going to create even more buying in them. And then what happened has been the opposite, that every time there's a drawdown, people have dumped these ETFs. And instead of, say, someone just owning Barrick or Newmont or Eldorado or whatever they own and selling those individual securities, the ETF in turns dumps everything, right? So, and I think too, one thing that the Bitcoin community has had going for it is, because it does have this cult-like following, and you have the hodlers and the people who believe in it longer term. And I'm not here to disparage those people. I'm here to say at least those people will just sit there and buy and average down and hold. I don't think the ETF holders are going to be the same way. I think that once you get one of these 20, 30% corrections in Bitcoin, they're going to dump, which will cause for it to go even down even more. And here's the last thing I'll say in terms of Bitcoin is, we've seen gold do well in 2001, 2002, during the bear market in tech stocks. We've seen gold, got whacked for a few months in 2008, but gold was back at its high of 1,000 an ounce by the end of the bear market, 2009. We've seen gold perform well in these multi-year bear markets where the market goes down 50%, right? How is Bitcoin going to do? Because we will bear market at some point that is, whatever, 1, 2, 3 years in length, that's going to take the averages down 50 to 60%. you think this that someone owns Nvidia and Microsoft and Tesla and owns Bitcoin, like somehow they're just going to be able to bid up their Bitcoin and sell while they have to dump their other three? I don't think that's going to be the case,
Right. Well, I want to show, well, one thing about what you're saying is the people, the Bitcoin community, the Bitcoin people, um, I don't think a lot of them know what an exchange traded fund is. Like they may not even have a brokerage account or trade stocks.
Yeah, yeah.
So what they've been told is that, oh, once this fund is made, it's going to make it so older people, the baby boomers will buy Bitcoin in their IRAs, and all this money will flow into Bitcoin. And so, what would you say to that argument? Because that's what they've been told.
Well, the stats are already starting to show, and Yahoo Finance did a good article on kind of the Gen Z and millennials chasing a lot of these stocks and sectors. And they kind of showed that really the majority of the funds that are going into this kind of ETF are Gen Xers, are like the oldest people. That's like our age, right? And then the millennials and the Gen Z types. So I don't really know how much interest, especially remember, okay, maybe this phenomenon happened 20 years ago, and the baby boomers, like my dad is 70, right? I'm 46. So it's 20 years ago when my dad was 50, maybe he'd be interested in something like this. But I just don't think at 70 he's going to be interested, right? Because at 70 he's going to get much more conservative, look for dividend plays, look for income plays, all of that sort of thing. So I guess it might attract a little bit of capital. And I guess the argument is if it just gets 1% of capital, that. But here's the thing: the Bitcoin market's already quite large. Like Bitcoin, I think is $2 trillion market cap. That's 8% of the US GDP. So it's not like, and I think the US market is like 35 trillion. So that's already worth 5% of the US market. So it's kind of like it's already attractive at more than 1% of capital. Like for example, our argument on junior gold miners or junior miners in general is they attract 1% of capital, or like say, half a trillion in capital, which would be like 2% of capital. These stocks all together are worth, a few $billions. So they could go to the moon. But like Bitcoin has kind of already attracted that capital in one way or another. Like you said, and it's not like 1% of your IRA. It's people that have those wallets and own it in other ways. So I don't really think the baby boomers are going to be that interested in it. And like I said, I think the ETF holders, a lot of those people tend to be day traders. A lot of them are going to be like, go look at the volumes on the GDX or GDXJ when it's tanked in 2015, 2016, or 2020. The volumes, the huge spike volumes are on the downside, the panic side, and then they in turn have to dump all their gold shares.
Right, right. Well, one thing about Bitcoin is that there are people right now that are doing something, a unique strategy, in that they're buying Bitcoin without money in their account. They're using it's so crazy.
It's almost like comedic. It's so great.
I mean, it's sad too, but it's working. So this is something I saw on Reddit.
Sorry, I'm laughing at this. That's not a good strategy.
Well, I mean, this is someone on Reddit. They take credit cards out, max them, and they're buying Bitcoin, but they're up $28,000 right now. So, it's working.
Well, I think a lot of the big Bitcoin exchanges or whatever the apps, they actually made it illegal on their platform to restricted people from buying on their credit card. But I guess if you could just go, because you can take cash out in your credit card.
Coinbase, you could use your credit card, I think.
You can use. I know if a bunch of them made it illegal for a while because that's what people were doing or restricted it. But yeah, you could go to an ATM, right, and take $5,000 off your credit card, and then go to the bank teller and deposit it in your account, and then move that account somewhere and buy Bitcoin. Like you could do that, but it's like it's just kind of like, I don't recommend that strategy. And one thing, you've used margin in the past trading. I've never used margin. because I'm in junior minors. I tell people that's margin enough.
Sure.
I don't need,
Yeah.
I don't need margin when I'm in basically one of the most volatile sectors of all time. So, but like I said, like I don't disparage it as like, if you want a risk on trade, actually you can, I'll screen share right now if that's okay.
Yeah,
Um,
sure.
and I show this in this. So this is Bitcoin going back to 2017. And the reason I wanted to use 2017, that was a year it kind of blew up from 1,000 to, almost 20,000. That was a year it kind of really became mainstream, right? Like Raul Paul, who runs Real Vision, who's a huge crypto guy now. That was the year he bought. I remember, or no, I think he bought it earlier, but I remember that was the year he really started talking about it. And so, and this is the year that all these like YouTubers started doing Bitcoin videos. So what I'm trying to say is all that stuff where people go like, oh, if you had bought Bitcoin at $50, no one was buying at $50 other than a handful of people. Like this was when people really started to buy. So you can see this huge move up in 2017, this huge drawdown in 2018. Then it's slowly moving up again into 2020, then a huge move up into 2021, this drawdown in 2022, and then this move up since, in basically 2023 till now. Well, what does that have in common? This is above, this is the QQQ, right? The QQQ fell in 2018, fell in 2022, and rallied in 2020, 2021, rallied in 2017. It's just tracking the stock market, but it's more leverage. Like right here, I have BTC, which shows it's up 5,000%. So great to anyone who bought it at 1,000. It's great to be up 50 times on your money, since 2017, but what we can see here, this is Bitcoin divided by the QQQ. And look at this huge outperformance here and this huge underperformance here in 2018. And then the outperformance again into 2021, then the underperformance then, and then this recent outperformance. Bitcoin is rallying with the Nasdaq and it's falling with the Nasdaq. It's just got a higher beta. So it's actually, you could argue, don't even worry about buying a stock. In the bull market, buy Bitcoin, and you don't have to worry about an earnings report or a bad earnings report because it has no earnings. And then during a bear market, actually, if you could try to short it, or at least the very least, I wouldn't short it anyhow, but don't own it. So I just wanted to show this. And again, like unlike gold, where like gold rallied in 21 to 2022 and gold held up from 2007 to 2009, we have not seen Bitcoin in a prolonged bear market. The 2018 and 2022 bear markets were very shallow in terms of both price and duration. And 2020 during COVID was like everything did this, and everything dumped for like a month and came back,
Well, someone could say then, instead of having half your money in, say, the stock market, you could put 1/4 of your money in the stock market and be doing that, for your stock market. I mean, 1/4 of your money in Bitcoin instead of the QQQs.
Yeah,
Or something.
I think this kind of shows it that, yeah, again, because the problem when you own Microsoft or you own Meta and they've done great is that they can have a bad earnings report and blow up. We saw that with Meta back in 2022. It went down 75%. And obviously Bitcoin, but you don't have to worry about that like that one day of a bad earnings report. It's like, you're just kind of owning this asset, So like one thing I will say, like I said, I'm not anti-Bitcoin. I think in a bull market, it's great. When there's liquidity, it's great. But I'm still suspicious that when we see, again, a sustained bear market, which with how overvalued equities are, I think we're going to see it within the next, by the end of this decade. How will Bitcoin do then? And if Bitcoin fell, you can see from 20,000 to 4,000, and then, almost 70,000 to 15,000 during very shallow bear markets. How's it going to do in a 2-year bear market where the Nasdaq loses 80% like it did from 2020 to 2022?
Well, and people have to understand that when you own Bitcoin, it's not like a stock. If you own, say, any stock, you own a share of a company, and a lot of them pay dividends. They have earnings, and then get bought out. Companies get bought out. So, like, if I owned Target and Walmart bought Target out, they would have
Yeah.
to buy my shares to do it. When you own a crypto coin, those coins don't represent ownership in anything. They're virtual currencies. They're not going to get bought out. They're not going to pay a dividend. They're just for pure price speculation. Just like someone might, I remember in the Iraq war when it started in 2002, a lot of people were going out and buying Iraqi dollars. They were selling them in magazines with the idea that when the war was over, that Iraq would be rebuilt and turned into a paradise, and the Iraqi dollars would be worth a lot of money. Well, it didn't turn out that way in Iraq, and the Iraqi dollar ended up, they made a whole brand new currency, so it became worthless. It never went up in value anyway. So it's the same sort of thing in the coins. A lot of these crypto coins are going to go away one day. Maybe the Bitcoin will stay, maybe it won't. I don't know. But most of them, the thousands of them, will go to nothing. They're worthless. They're junk.
Well, here's the thing. Like I got the coin market cap thing here, right? And you can see there's all of these, and I don't want to get into ever. And they've obviously all rallied recently, but like you said, you're not like, I've seen this one thing, like you also have something called tokens, which is kind of like an offshoot of a coin. I don't want to get into a crypto talk, right? But I've seen that like everything's going to be tokenized, real estate. But I'm like, look, like you said, when you own shares in a company, right? You have ownership in the company. You can vote at the company's annual meeting, right? Even if you have one share and maybe your vote isn't going to count a lot, but it's not like an election where we all have an equal vote. The guy who owns 1 million shares has a lot more sway than the guy who owns 1 share. But like the thing about it is you can still vote. You have ownership in the company. What does a token mean? Like you've monetized this asset in a certain way, but like, I don't know. Like maybe I'm old fashioned and it will cost me from making money in these bubbles. But like, look at people are buying pictures of monkeys and NFTs and whatever, this nonsense for thousands and thousands of dollars, and it's like, it's not like this painting I have here behind me, which I paid $1,500 for from the artist, which is probably worth more than that now. And it's like a physical thing. It's like, this is like a graphic someone put up on the internet, right? So I don't know. I guess I'm old fashioned in some ways or whatever. And then, and here's another problem I have with all these coins. Again, how does a company trade? Like I'll just put, because I was talking about Meta. I'll just put Facebook up. People are trading Facebook based on their earnings, cash flow, outlook for the business, all of this sort of thing, right? Or Meta and all this sort of thing. The problem with these coins, I see that they have some kind of concept or something that they're developing. But here's what I find interesting about these coins. In the .com bubble, we saw pets.com, we saw the globe.com, we saw all these companies explode in price, go down and go bankrupt, out of business. Why? They were trying to build real businesses, but couldn't do it. None of these coins go under, right? Unless there's some fraudulent exchange, like FTX, right? Like for example, like Litecoin, which is one of the bigger ones or whatever. Litecoin has been around, or Cardano. I know all these coins, right? Tron, they've all been around forever. And the reason they've all been around forever is these things don't have huge amount of overhead, like try to develop a company. So once the insiders can dump a bunch, they can just kind of keep the coin up and running, like does Tron movie to me, not a coin, not an investment. Does Tron have to, like do a quarterly report? And you can see, I'm telling you too, like, look at the market cap. I'm not here to bash crypto, but like look at the market cap on these things, right? Bitcoin 1.1 trillion, right? Ethereum 400 billion. Like, you look at the market caps, and it's like, like my opinion is this, Mike. It's like if these things had to report, and not so much Bitcoin, which is considered just kind of something to hold, like a commodity or currency, but they'd be worth 1/10 maybe of what they would now. If you actually saw how much money and how much business these things actually generated, you'd probably laugh at most of them.
Well, I'm big
There's Litecoin there.
point about it. I want to show something on my thing real quick. Oops, I'm pressing the wrong button.
And I know I'm not here to bash it. I'm just here to say, like, this is my issue with it. That like what do these things do? What are these, like, like we're talking about junior mining. Junior miners have to prove up that they have all these ounces of gold in the ground, right?
Right.
Yeah, and you see all those cryptos that have billions and billions of dollars in market cap. Like a junior miner would have to have tens of millions of ounces in the ground proved up for that to happen. Because they're going to mine the gold and you sell it, and then it's your future cash flow and revenue. And again, call me old fashioned, call me like, oh, call me a boomer, like that's an insult or whatever. But I just like cash flow. I like seeing how much stuff's going to make, what it's worth.
I just want to make it real simple. And then, so this right here is a stock certificate.
It ain't worth nothing.
It ain't worth nothing. But at one time, it's for WorldCom. At one time, before WorldCom went bankrupt, this enabled the holder and owner of this certificate to go vote and attend the corporate meetings. It's a legal document. And when you own a coin, you don't have a right in anything. So that's just make it real simple. But anyway, what else are you looking at?
Hey, where'd you buy that?
Probably eBay. It's
Because I remember after the Bre-X fraud, for those who don't know, that was this big mining fraud in the mid-90s. If you ever want to see a pretty good movie on it, Gold, with Matthew McConaughey's they changed the name of the company and they make it take place in Reno instead of Calgary. But it's basically the story of Bre-X. And I remember for years, for like $1, you could buy the Bre-X stock tickets in Toronto at all the gift shops, like in the city. Right. And there's a perfect example. That stock at one point was worth, I think it was 6 billion Bre-X. And it could be a stock certificate for 1,000 shares, right? Which was worth millions of dollars at the top, but it was worth $1 after. So, well, at least it was still worth something. How much is an ape on the internet worth now?
or all the metaverse real estate. I don't even hear anything about that anymore.
Like, and I could get into the cultural part of like millennials and Gen Zers having, living their whole lives online. You could get into that part of it, but like we that's for another time, so.
Well, what else, before you go, what else are you looking at in the markets at the moment?
Actually, today I just put out a report from my paying members. There's a few silver stocks. Silver obviously is, 22, 23. It's not like we're at these dire levels, but the equities in precious metals have been decimated. So there's a couple stocks I found that over the last 15 years have had these huge trading ranges where they'll go up 3, 4, 500%, then they'll fall 80%. And right now they're again at the bottom of those ranges. So I think they're kind of interesting down here. So I on my pay members, I put out 3 that I would kind of be looking at right now. And right now, other than that, I'm pretty quiet. I did some private placements late last year, but because I don't think the precious metals market is really going to move to the rate cut start, which I think will be May or June. I think we got in a way, it's good for investors to get this 2-3 month period to maybe start picking away at stuff, but also it means in the next 2 or 3 months, I just don't see much of anything happening. But I think they will start the rate cuts around June of this year. And I think we'll have 75 to 100 basis points of rates cuts this year till the end of the year. And I think that's when historically, when they cut rates, precious metals do very well. And I kind of see inflation continuing to maybe head down to about 2.5% from about 3 where it is now by May, June. And that will give the Fed even more of a catalyst. And last thing I'll say about the Fed too, I think one of the issues they're having too is they know the interest of the debt is going up exponentially now. And I just read that the interest on the debt in the US was 4%. It was like 1% just 5 years ago. So I think they don't talk about that in public, but I think they know that, and they know like we have to get rates down a bit because most US debt is like two years orientated in term. So that they're kind of like, well, if this keeps being rolled over at 5%, those debt numbers are going to go higher. So let's get it down to 3 or 4% at least,
That's the scary thing. I mean, I put up that thing about the person taking the credit cards to buy the Bitcoins and we're laughing at it. But in effect, all of us Americans are doing the same thing with the federal budget, because
Yeah.
it's going to blow up one day too in the same sort of sad situation.
Here's another thing with that guy doing with the credit cards. You got to pay 20% interest to the credit cards. So it's like that guy got to make 20% a year just to break even.
Hopefully they understand that.
Yeah, well, the nice thing the U.S. government had for years, they were basically borrowing at zero, but now that's 5%. And that's an interesting thing, just to kind of segue into that. The last thing we'll talk about here is that I just read recently too that the U.S. budget deficit's going to be 2.5 to 3 trillion this year, which is almost 10% of GDP, over 10% in economic expansion. And it's kind of like the government is spending. It's kind of like a sailor. They talk about spending like a drunken sailor, but the sailor gets fired from the sailboat, right? And he's still spending like all the money he doesn't have now on drinking. Well, the U.S. I don't think they've woken up to the fact that like they could do that from 2009 to 2021 because rates were essentially zero, but rates are now at more normalized, levels now. So they can't be running these, $2-3 trillion deficits anymore, but they'll probably won't wake up until it's like, oh man, we can't afford Social Security now because the interest of the debt is so high. Like it probably won't wake up. They won't wake up till then, so.
We all grew up with Uncle Sam. It turned out Uncle Sam's an alcoholic and Uncle Sam's a drunken sailor who can't stop spending.
He is too, right?
Laugh.
I know. So.
Well, thanks for taking time to talk with me and everyone else. I've linked to all your stuff in the description of the video so people can.
Okay, thanks, Mike.